President Biden banning Russian oil, but thanks to the magic of fungibility, you'll probably buy it anyway. Coming up here in The Jog. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It's 7:10 here in the middle part of the country on Wednesday. It is March 9th, 2022. Here's your morning jog around the economic headlines of the world. Oil down a little bit this morning. Of course, huge news yesterday. I haven't talked about it yet, so I want to talk about it today. President Biden banning energy and energy products from Russia, right? Oil ban. Oil can't come into U.S. ports from Russian ports.
Very aggressive. A new day. And you won't be pushed around.
Let me tell you why. I'm going to go back to full screen here. Let me tell you why you'll probably end up buying anyway. It's called a concept called fungibility. Dollars are fungible, meaning $1 is another dollar. Oil is very similar. Now, before anybody blows me up in the comments here, oil has specific grades. Refineries are set up to set and run different grades of crude oil, but this is a simplification to help folks understand how global trades work and how sanctions work. Sanctions hurt the country that imposes them. They hurt the country they are imposed upon. They help folks in the middle. Here's how. Okay, so say I am a person in China who owns a refinery, right? I am a black box. I'm a Chinese refinery, totally outside of capital controls. I want to make some dollars in the global market. So what do? I go ahead and I buy some Saudi crude, put into my refinery, right? It's sort of the global benchmark price. I go ahead, let me buy some crude from the good old US of A, right? We'll export it from the Gulf. We'll put it into my refiner. Last, let me buy some cheap Russian crude. It's sanctioned, but my government allows me to import it. I'm going to put it into my refinery. Let's load that up really nice and get a nice discount on my oil, my feedstock as they call it. Suddenly, I have squeaky clean Chinese diesel fuel that I can then export around the world. Tasty, including to the United States. This is how sanctions work. They hurt folks in the sanctioned country, right? Russia has to sell their crude for less. The United States has to buy their diesel for more. The folks that win, these guys in the middle, they pick up the spread. Overall, do I think it hurts Putin? Of course it does. But you have to remember along the way, you're going to end up helping some Chinese refiners and the Chinese government to make some dollars off of United States consumers' backs, because that is the way trade flows. You don't stop trades, you merely redirect them when you impose sanctions. Before we get you off to a nice Wednesday, I want to talk about the Bitcoin bill. It's actually an executive order. Bitcoin up a little bit as the long-awaited executive order tells the U.S. federal government to start looking into cryptocurrency. Could it be useful? Do we need a Federal Reserve asset? A digital dollar? Really, this executive order is a bit of a nothing burger. Really just tells the government to start investigating, where they're probably investigating anyway. On a go-forward basis, does not look like any heavy-handed crypto regulation coming through, and the alternative asset certainly is benefiting from the short term on that harbinger of good news going forward. If you want some additional information throughout the week, feel free to find me on the internet. I am out there. Until then, I hope you have a very nice rest of your Wednesday. I am